Good evening. Great to see so many of you here virtually. And the great thing about doing this virtually is that you can ask questions as I go through this and as things trigger in your mind. So feel free to do just that. So what's my role in this evening's proceedings? I'm here to show you that our finances put us in a strong position to weather the storm caused by coronavirus. And I'm going to do that in two parts. I'm going to tell you about the financial year ending in January 2020, giving you the information you need to approve our annual report. And then I'm going to give you a more up-to-date picture of our finances since January. So first, what's the story of our 2019-20 financial year that's contained in our annual report? Despite sales and profits falling, I'm going to show you that we are in a good, strong financial position to weather the storm caused by coronavirus. You can see here that turnover fell £5 million year on year as we exited our pharmacy and optical businesses and moved our distribution operation into the wider Co-op network. But really pleasingly, that our sales from our ongoing businesses grew by £6 million to over £335 million. We were delighted to see a £5 million increase in food sales, with over £1 million of locally sourced produce sold in just one fortnight. Rental income from our investment property portfolio now exceeds over £8 million, and the properties are worth over £118 million. Our security business, Co-op Secure Response, has continued to see growth, with sales now in excess of £1.5 million. We did see sales fall in our funeral services, with 120 fewer funerals conducted, but we broadly maintained our market share. Investment in our stonemasonry business helped achieve sales growth of over 15%, while our travel and events business retained a steady performance. Trading profits did fall by 19% because of the rising cost of doing business. But we're pleased to have generated trading profits of £4.5 million in what was a challenging market, and I'm going to explain some more later. Our profit before distributions and tax did fall from £5.2 million last year due to several one-off items. Investment from our prepaid funeral bonds fell by £4 million. Some of our properties in our investment property portfolio fell in value because of the general market conditions and some of the challenges faced by the high street. But we did generate a profit of £1.6 million on disposal of our pharmacy, optical and distribution operations. We have a strong balance sheet with members' funds in excess of £200 million, and whilst it did fall mostly down to an increase in pension deficit, we continue to have a strong and robust balance sheet. So to summarise, sales from our ongoing businesses grew, we generated a healthy level of profit, and we continue to have a robust, strong balance sheet, which has stood our finances in good stead to confront the challenges posed by the coronavirus. So why did our underlying trading profits fall by nearly 20%? Well, last year, underlying trading profits was £5.6 million in 2019. That increase in sales from ongoing businesses grew our profits by £2 million. The rising cost of the national living wage cost us £2 million. We controlled our overheads less than 2%. But we also generated losses in relation to our pharmacy, optical and distribution operations, which we exited. Overall, we ended up with £4.5 million of trading profit, a healthy level of profitability given the challenging market conditions. But what about our balance sheet? You can see we've maintained a healthy level of balance sheet, healthy level of net assets and members' fund, all in excess of £200 million for the last 4 years. So what about 2020? Well, we have over £240 million of property, plant and equipment. That's the properties we trade of and the equipment we need to run our business. We've also got over nearly £63 million of funeral bonds, prepaid funeral plans, and the way they're accounted for means the net impact on our balance sheet is in excess of £15 million. But the bad news is that we've got a pension deficit of over £40 million. And that increased £11 million due to a number of factors: changes to mortality assumptions, falling corporate bond yields and changes to inflation expectations. Our pension scheme deficit is volatile and is subject to changes in market conditions, but it's no cause for concern. We have pledged properties as security, and it covers the liability without negatively impacting our ability to trade. Overall, with assets and members' funds in excess of 200 million, we've got a strong balance sheet, and as I'll show you later, this helps us weather the storm caused by coronavirus. So you've seen we're a profitable business with a strong balance sheet, so what about our cash? Well, at the end of our last financial year, we had £7.2 million in the bank, and we borrowed £2.6 million to fund investment properties in Colchester and Woodbridge. Proceeds from the sale of our pharmacy business and the fixed-term withdrawable shares we issued, offered to members, generated cash in excess of £3.7 million. Over the past 5 years, we've invested over £76 million in our business, introducing new technologies and refurbishing our stores and branches. We've continued to invest in the long-term success of our business, with £4.3 million spent on food store refurbishments and over nearly £3 million on technology. So we're in a good position. With cash in the bank and a strong balance sheet and a healthy level of profitability, we are in a strong financial position to deal with the coronavirus challenges. So how have we fared since the end of January? It's probably safe to say that our nation is experiencing a year like no other, and things will never be the same again. We've been tested in ways we could never have imagined. As an organisation providing essential services, we've stepped up to meet the extraordinary challenges during the first half of this year, and we'll continue to do everything needed to support and improve the daily lives of our members, colleagues and customers through the pandemic. Like many others, we've been learning to do things differently this year, like this AMM. You've already heard from Roger and Nick on how our food and property businesses have responded to the challenge, but what's it meant for our finances? Now, what you're about to see wouldn't have been possible without an unbelievable amount of hard work and dedication from our incredible colleagues. They have worked tirelessly throughout, and I've been continually moved by their spirit, adaptability, and tireless commitment to you, our members and customers. As a food retailer, we've played our part in keeping the nation fed through lockdown. This graph's going to explain how the sales moved against the corresponding period this time last year. So that line in the middle is the sales we generated last year. Food has seen double-digit growth in the period since January. But we have seen a big change in shopping behaviour, as I'm about to show you. As the country entered lockdown, you can see the number of visits to our stores fell dramatically and have yet to return to the levels we saw last year. But whilst the number of visits fell, the spend per visit grew, as you can see here. So for the food business, we're beginning to see more normal sales volumes return, although who knows what will happen next. Unsurprisingly, the travel business has been adversely affected by COVID-19, with sales down 100% on last year. You've already heard from Roger about the fantastic job our colleagues did in helping us stranded abroad at the beginning of lockdown and the level of rebookings. Our forecourts, our petrol filling stations, have also seen a 30% drop in sales, a combination of both reduced volumes and lower prices. Other represents our property, secure response and events business. It also includes our funeral services business. And as a funeral provider, we supported many families in circumstances which made their grief far harder to bear. But overall, we have seen an uplift in sales, but it's a very mixed picture for our family of businesses. But it really does show the strength we have through our diverse family of businesses. So COVID's impacted our sales. What about our profits? Our colleagues have worked tirelessly to deliver high operational standards in a challenging and volatile environment. They've adapted to the constantly changing situation brilliantly, and this is the result. Trading profits of nearly £6 million. The profits from our food and property businesses have supported our other businesses, as have our support service colleagues. As you can see, we're also incurring costs in relation to COVID, which I'll explain next. The diversity of our family of businesses has been a real strength in these times of uncertainty. So what does that £1.9 million of costs related to COVID cover? Well, colleague, member and customer safety and well-being is and always will be our top priority. We've invested hundreds and hundreds of thousands of pounds into measures to keep both our colleagues and customers safe. This includes the installation of screens at till points and providing gloves, hand sanitizer and face coverings for all our colleagues. We've also guaranteed pay for sick, self-isolating and other affected colleagues. We've paid out a colleague thank you and doubled the discount available. We've also provided support to the NHS employees by providing a discount for them for several months. For our members and customers, you've heard what we've done to address the challenges caused by COVID from Roger and Nick. We've worked tirelessly to make our stores and services safe and welcoming. We continue to follow government and World Health Organization guidelines to minimise risk, and we're issuing regular communications to both our customers and colleagues, reminding them of government guidance and the measures we have in place. And our communities, we've helped those who needed help the most. And I'm not going to spoil what you're going to hear from Neil later. Your generosity has been put really, really good use. We should also recognise we've received support from government through rates relief and retail grants, and that's helped us pay for some of these costs that we've incurred. So what does this mean for our cash position? So the cash over the last 3 years, we've had cash in the bank. And the cash at a half-year end in August stood at £13.5 million. That, along with our strong balance sheet, shows that we have a strong position to weather the challenges by coronavirus. We have access to funding if we need it. We're continuing to invest in our future, despite not being able to progress as quickly as we'd like with our food store refurbishments. We spent £4.4 million with £1 million on technology and nearly £2 million on investment property developments in the current financial year. So hopefully you're reassured that financially we're in a very strong position to weather the challenges caused by coronavirus, whatever we face next. So what does the future hold? It's clearly impossible to predict the full nature, extent and duration of the financial impact of COVID-19 over the remainder of the year. And we have the possibility of a no-deal Brexit to factor in. It's likely to be a very, very different second half of the year. There are clearly a wide range of potential economic outlooks, a likelihood of rising unemployment and a long-term impact on young people starting out. It's also likely that our business will continue to be disrupted beyond the end of the pandemic with changes in food shopping behaviour. But we've taken all that into account and we've looked at our finances and we've planned for the future, and we're in a really, really strong position to weather the challenges caused by coronavirus. None of what you've seen would have been possible without the truly phenomenal effects of our colleagues. But hopefully you're really reassured that we're in a strong position to continue to improve the daily lives of our members, customers and colleagues for the next 6 months and beyond. Thank you very much.